All right, to help set up the trading day, we welcome in Kevin Hincks, live from the CBOE this morning for our pre-bell playbook. All right, so it's a little bit of a quiet day, you could say, as far as the E-minis are suggesting. What do you make of it this morning, Kevin?
Good morning, Sam. After a pretty good sell-off 2 days ago and a recovery day yesterday, the markets are very hesitant to start the day, very cautious here, as futures are all higher, but they're not higher by very much. You mentioned a lot of things on the calendar today that we're going to look at. I think the Tesla vote is big. I think there's things going on with the overall market. You mentioned day 37 of the government shutdown and all the things that's going to affect over the next couple days. Things are getting a bit serious here in terms of the government shutdown. And when you think about Thanksgiving holiday travel, things like that. So you mentioned crude oil back below 60, 10-year yield slightly lower. That lower dollar is giving a nice boost to gold, but not so much in terms of Bitcoin, a bit lower today. So all things considered, a very cautious, hesitant start to the trading day, Sam.
Yeah, and I suppose some of the jobs data we've been getting out from Challenger is not helping today. We've got 153,000 job cuts, marking 183% month-on-month increase, 175% on an annual basis. That's the most since 2003, and tech layoffs were notable. What do you make of some of those numbers that we're getting out from that data print?
It's interesting, Sam. We don't normally give this Challenger job cut a lot of attention, but we don't have much else to deal with when it comes to the labor market. And frankly, a secondary level of data like Challenger job cut caught everyone's attention when it jumped up to a 22-year high at 153,064. They said on their release, the top reasons for job cuts, cost cutting, AI, the DOGE impact was the leading reason in 2025. The government, think about this, Sam, for the government this year is down 308,000 jobs. Now, if you compare that to the 41,000 jobs that we averaged in the final 12 months of the Biden administration, pretty dramatic flip there in terms of government hiring. The other things, the tech firms that led the cuts in the private sector, followed by retailers, and then the service sector. So, like I said, this is not a top-tier economic data, but it's certainly one that caught everyone's attention with its big number.
Yeah, and I mean, in the absence of all the official stuff, we're certainly giving a lot more credence to these sort of alternative data prints. Just switching gears, we saw quite a stark move to the downside just as we wrapped things up yesterday in Nvidia, and we're now seeing that Jensen Huang has been speaking to the Financial Times, talking about how China could actually win the AI race. Now, he has since softened his tune, seemingly, on social media. I'm just wondering what you make of this, because, not to get too political here, but certainly we have seen Jensen Huang quite successful in some of his lobbying. But then, of course, this week, the big focus had been the fact that I suppose the report's words were that the Blackwell discussion was torpedoed by the Trump administration. So I'm just wondering, what you make of this in the stock reaction.
Yeah, I think the new reality in the world of Jensen Huang is that his words move the markets now. And when he said that China is going to win the AI race, that surprised markets and shocked markets. Now, you're right. He did soften that stance a little bit, and he gave some color on why he said that. He said China is lowering the regulations, right? They're giving big subsidies for energy. Remember, energy is going to be such a big part of AI and the energy that we need. He also said that U.S. the regulation coming from U.S. Politicians is hurting AI. Also, he did mention that the talent pool in China is twice the size of the U.S. talent pool. So I think he's basically just keeping the conversation going about China's ability to possibly pass the U.S., and he wants the U.S. to be a little more competitive. Well, you're talking about communism versus a democracy, so it's a bit tricky there. But I think Jensen Huang was more trying to start a discussion and make sure that everyone's eyes are on the ball with this. But he certainly did move markets when he speaks.
He certainly does. He's very influential, Jensen Huang. And as you mentioned, I think he's just kind of keeping everybody's eye on the energy side of the story, because it's nothing new to hear Jensen Huang talking about how China is very much ahead in that space with respect to all the power needed for AI, although maybe it's just a sort of whisker behind the US as far as its technology is concerned. But it's been interesting hearing from Andrew Bailey, as I mentioned as well, on AI valuations today, him saying that market pricing in returns right now, which are uncertain, and they could be actually even overpricing. So, I think that's been a really interesting update as far as this whole conversation is concerned too. Also, we're talking about this morning the US to reduce flight traffic by 10% at 40 airports because of this longest government shutdown in history. Interestingly, the airlines were all up quite significantly yesterday. I think that was on maybe some EPS numbers out of one company, but I'm just wondering what you make of this as we are now creeping closer and closer to a critical holiday season, Kevin.
Exactly right. And Sean Duffy, the Secretary of Transportation, basically giving a warning signal to all to airports and people in travel that they may have to cut 10% at 40 airports, and they think it could be worse. It could get worse as time goes on. As we reach the Thanksgiving holiday, people are going to start getting blamed if we get major disruptions in holiday traffic. And you already saw headlines about lines and TSA and problems at airports. And yesterday, I believe it was yesterday, or maybe it was Tuesday, they had an air stoppage in Washington, D.C. So there's problems. And, the pressure now, day 37 of the government shutdown, it's starting to really affect the overall economies. And remember, that's taking away from U.S. GDP, the government shutdown. So, yeah, it's getting serious. Sean Duffy really sounding an alarm there in terms of what's coming up in the future for air travel without the resources he needs to keep this going. It's a problem that's not going to get better if we don't open the government, Sam.
Yeah, and look, as economists have been sort of pointing out, just how uncomfortable does it need to get in this economy, obviously for the two sides to come to the table and hammer something out right now? I suppose that's the big question. Kevin Hincks, thank you so much for getting us across those key stories this morning ahead of the open. Appreciate your time.